What's up, guys? I know it's been a really long time since I have provided any content streaming for Spark Authors. I am still trading. Just decided to, kind of do it on my own. Here and there, past a few combines, blew a few combines. No big deal. My cash account is still doing really, really well. But I wanted to share this morning segment where we provide the supply and demand zones, and you guys can either utilize it or not throughout the day. But what I found was some really, really great success in just honing in and figuring out this strategy on the 1 hour and 15-minute chart, making sure I understand where those macro kind of or mid macro levels, right? Like macro levels for me would be like the daily and the 4 hours, but understanding where those mid macro levels were or are before you start your day, it's kind of key and important, right? We can catch moves from those levels and pretty much end our day in less than 15 minutes, sometimes less than an hour. And then throughout the day, you can play and continue to, trade. But really, really quickly, you can see on this 1 hour chart here on the left side, if we blow it up, the market has created a demand zone down here and we snapped away from it. You usually had no point of interest here, right? But you would think, but if we go back, we see that this was a turbulence area where we were flying up, but then we reached an altitude where we ran into some turbulence, and there was going to be some shaking up there, right? Like some fight. So even though we had, a move back down and a move back up there, we had rejections, and then we broke through with some force. So like the code has gotten really, really simple for me. We honed it down over a few years just to figure out what do we want to see, right? White candles are buyers pushing through the market. Well, it's unusual buying. So there are more buyers hitting the ass or more transactions hitting the ass than there are hitting the bid. Okay. And when you hit the ass, you're willing to buy at a higher price. And that is what makes the market move up. Conversely, blue would be the opposite. So when sellers are willing to sell at a lower price, in an unusual way, it has to break a certain percentage, which is greater than the previous 18 or 30 bars, then you'll see a blue candle coming down. So that's what's going to move the market down. So you want to see a fight between white and blue to support the direction that you're going in, okay? As you can see, we want to kind of be careful when the market enters, when the market's in this death cross, right? We went below the 200, which is the gray line. If it's above it, it's the golden cross. We want to be careful when the market gets into the zone if you're a seller, because it can snap back out of it like it did right here. Now, if you were a swinger, it wouldn't matter because we ended up breaking down below. But if this thing caught wind and decided to break through all-time highs again, you'd be in trouble. So you want to see it break above, careful in the zone, next leg up. Kind of didn't make it to the zone, made it to the zone, failed, had some turbulence, and then it went back up, right? So, and then it flips. I don't play in the guessing game of what's going to happen a week from now. If it's in this zone throughout the day, I'm shorting. If it's in the zone throughout the day, I'm longing. And that's just kind of how I play with it. Here might be a little bit of trouble because if you shorted, you got burnt and then it came down. So that's where a swing trader comes in handy. But here we snapped away from it, came back, right? And this happens on every time frame. So it's the 100 EMA 200 cross combination. And you want to see this happen to kind of support your bias. All right, along with the demand line and then a white candle if you want to be bullish. All right, so the 1 hour today has two zones that we're watching. We're watching the 19496 zone. Okay, that's where we bounced from before. If the market gets down there, I expect another bounce. If we continue to fall, I expect to bounce somewhere down here. These 4 hour levels are also, and daily levels are also there for us to kind of like check in with. But we could also check in with the ones up higher, right? However, I do have a supply line that I pulled from back here that I chose to watch, right? So that's that double top area we started to fall from before. Every time we knock up here, came down, knock, came down, knock, 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 came down. If we go up there again, we can probably break through. It's not important to know what's going to happen because you'll never know, but you know that I know I don't want to go long up there. Okay. So we got 19,698 that we're going to watch for rejections, 19,492 that we're going to watch for a bounce. So that's about a 200 point range, right? Or 300 point range. Yeah, mostly 200 point range from all of this here that we can take advantage of. Okay, yeah, 206. Let's move over to the 15-minute. And like I mentioned before, you want to be careful when the market is in a bull run and it has the golden cross. It'll come back into the zone, snap out of it, consolidate, came back into the zone, snap out of it, came back into the zone, consolidated, snapped away from it, snapped out of it, right? Like it just becomes a repetitious thing that you want to look for in the market because it seems to work, right? Like, and I know sometimes it feels crazy to trust or rely in, you know, moving averages, but we're not relying on a moving average to become wealthy so much because we're not swinging, but we're relying on the moving average to anticipate an expected move. And why would we anticipate a bounce out of this? Well, 1, 2, 3, 4, 5, 6. Could fail the 7th time. But we don't get into the business of, well, what if I'm right? What if I'm wrong? It doesn't matter. You just know that you want to play that zone the way you want to play it. As you can see, the 15-minute becomes a little bit like more of a chop fest looking type of thing, but you had to play here to the downside. You have a couple plays there. So yeah, you don't really want to get into like, I need to be right about this trade. You want to be careful at that zone. Make sure you take your exits. But let's look at some 15-minute levels here. We got our 1 hour levels. 15-minute, we got a level at 655, 19,655, and 19,445. So that gives us about a 210 point range, right? So the market is literally ping-ponging. It came up, created demand, snapped up, created demand, snapped up, and then it started ping-ponging between these zones. Now, the reason why I don't have these levels marked out is because I use the most recent one. The market may not get down here, and if it does, you want to be careful because it'll be breaking. It will be breaking 200, right? And we can have a death cross. If you're wrong, you're wrong, right? But you want to watch these levels because if you shorted up here, you would have gotten this move. If you shorted, you would have gotten that move. And then I'm not going to really talk about what this blue and white cloud is, but basically it's a super trend. That is one of the most dynamic, craziest super trends that I found where it literally bends. And, you know, like if this is supposed to be my stop, you're telling me to move down a little bit more. Right? Don't get out yet. Right? And it works. It works. It gets you into a long trending trade for a really long time. So with that being said, man, the pre-market, I'll be watching for shorts up here, longs down here, possible longs here. And then it just becomes like, what is the 5-minute telling me at these zones? So we had our top-down analysis, right? We didn't even go to the daily and the 4-hour because all I'm doing is finding these major levels, 4-hour, 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 4-hour. And that's too big of a range for me to try to day trade. So the 1 hour gives me this 200 point range. The 15-minute gives me this 200 point range. And then it becomes like, well, how do I jump into this market? That's the hardest thing that I think a lot of people don't provide for free, right? They just tell you, draw a line and, you know, go long at this trend line, and it works. It's not that it doesn't work, because clearly you see we knock, 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 right? And then if it breaks that trend line to the downside, get out, right? So you can definitely do that. But for me, I am primarily a supply and demand trader with the Bollinger Bands telling me when the market is in a flush or a push phase, but I'm trying to capture a supply move down and take as much as I can. Like I'll probably be out of the market at this move because when this bounce came, I'm going to think that, oh shit, the the 200 moving average, sorry, the 100 EMA is going to probably rocket this thing back up like it did back here. So I don't really want that smoke. I'll probably get out, if I short it up here, I'll probably get out here because it's building a demand line, and then I'll miss that move. So there's a lot of yin and yang, give and take when you're trading. But the point is, did you make more than you were willing to risk? And if you come to that conclusion, I think in trading, so just to give you an example, if this high, when I seen this wick come in at this 4 hour and 1 hour zone, I'm trying to get in somewhere here, break through supply, keep going down, and I'm getting out there, right? So like, let's just say I got in right there. I'm willing to lose about 35 points to make 60 points. That's almost 2 hour trade, right? And I'm gonna have to get out of there because of what I know the market can do at this level. And then I'll miss out on this 90 something points, right? And then this possible 126 point. Or you can scale out, stay, and see if you get it. But now the market has, if you're a swinger, the market has retraced back to 25 points, right? And you have to think about what you're going to do there. So it's not about getting all the way back down here, right, for 200 points. It's about really just risking 35, making up to 60 plus points, right? Up to above 30 points, right? Above 35 points. And then you got the 1 hour situation going for yourself. So from down here, a wick, demand, catch a pullback, you're risking, let's just say 30 points. The thing goes up, create some little supply here, right? 120 points before you really have like to get out. Let's just say you didn't get out at the wick, you got 100 points. The risk reward is there, almost 3R. And that's the most I can say about it. But yeah, in the pre-market, guys, we're going to watch these zones. We'll check back in to see how these zones play out. I hope that you can find some level of success in the long run. Okay, like these zones don't bust every day. If this thing decides to trend, we're going to rip through this high because we are in a bullish trend right now. We can look up here, quickly glance at what the market is doing on this 15-minute. The ATR is about 14 points. That's going to change at 9:30 when the market starts whipping with some volatility. But the market is bullish since we are above the 200. The trend is bullish since you can't see it because I no longer have it on my chart trying to declutter things, but basically making higher lows. And these wedges right here are good zones to catch on a pullback. So this is considered a good zone, but it can go to the blue zone. And this is why I took this off. But that's what indicates that the market is trending bullish. We're accelerating, and that just simply means that we're making higher lows. And right now, this is like a flag pattern. Okay, so that's how you read up here. If you ever were wondering, like, what is the market condition right now? And this is just on a 15-minute. So what makes this a flag pattern? Bomb. Okay. And I just determined that if the market pulls back and makes lower lows, lower highs within each candle, consider it a flag pattern, but it has to stay above some level down here or can't break below this because then it's like a double bottom at that point. So yeah, there's certain things that I really kind of ironed out with the code. And you know, I can delete more stuff because I'm mainly just trying to play supply and demand. But this area right here, if we ever move to this area, it's a blue zone inside of a 100 EMA and above the 200. This is going to probably catch a bid. And I don't need to explain again why I believe that, but I'll put an alert to, you know, kind of see if we ever get there. All right, guys. That concludes the pre-market segment. I want to keep these things short and sweet. I don't want to come in and, you know, talk for hours about my strategy, my edge, and the code, et cetera, et cetera. I really just want to point out the levels. You guys have the levels. You can either trade them or not. But I think you will see over time how these levels are insanely accurate. And if I removed, so like I'm going to be calling out these levels, right? Like let's say this would have been Wednesday's level at 11 p.m., right? Yeah, no, this is during the trading day. Boom, I'd have called out that level, right? So those would have been the levels. Then the next day before this area here, 9 o'clock, I'd be watching down here and I'd be watching up here. We smoked through that level. But hopefully at 7, I'd watch this level, right, for a bounce. So before 9:30, I'd call out this level here. And as we pull back into it, we snapped away from it. It doesn't have to touch, right? You just know you want to go long down there, short up top. Then this happened throughout the entire day up until 9:45. I'd have called out shorts up here. We broke through it, came back, held. That's a breakout, retest, hold, continued. Demand came in. So like it's tricky to look at this and kind of show you what I mean as far as like how these levels will play out, but just use your eyes, right? Demand came in, supply came in, demand came in, supply, rough waters up here, right? Couldn't really break through, but it did break above it, right? And you want to grab these because if it runs, it's a quick stop. But if it breaks this high area, then you stop out. If it doesn't and break back below this, it's cooked. Demand came in up there again. Catch these, swing high as your stop. It got cooked. Oh, catch this long. Right, so they're just going to keep ping ponging. Now, this is what I mean when you try to catch the levels up here, you got to stop out. Break above, stop out. Catch it again. Ugh, bounce there, stop out. If you tried to catch it again here, you'd get cooked. If you tried to catch it here, you'd get paid. So we went all the way through all the demands at that point. So it's a strange thing to try to catch the pivot or the rejection at a zone, given the fact that it broke underneath. But this is one of the craziest plays of liquidity grab that you want to be involved in, because I think they call it the banker's key. And it's usually more chop, right? Like it's chopping at this zone or it's inside of a range. And then they grab liquidity above this supply and then they slam it down. Then they grab liquidity below that demand and then they, slingshot it up. And I think the great thing about how my brain has shifted over the years is that I don't really necessarily need things to play out exactly the way the market, because like the market is sloppy. NQ is very, very sloppy. It respects levels, but it will take out that level and then go and respect it, right? Like it would just fall shy of that level and then, but it's a zone. It's a zone, and it's how much are you willing to lose, and are you going to be on the right side when this thing decides to spring back up or reject? And let's just say you wanted to go short for the breakdown, be very short-lived, and it bounced right here at the daily, like to the T and wick. Things like that are not coincidences to me. But yeah, man, the move back up looked really, really good. It kept slingshotting up. We had a breakout here, retest, hold, right? So that's literally it. Like, how many plays does the market do at a zone? This is a liquidity grab play for me. It's only 5 things it can do once this demand comes in. It's going to make a higher low, go. A V shape, go. A double bottom, go. And this one here, that's so far, that's 3. This one here is the 4th one. Liquidity grab, go. The 5th one is a trend. Rejects here, keeps going down. Okay, so this is the 5th one. Break above, looks like a double top. Break, held on a pullback. That's the 5th one. It's a trend at this point. You want to get the hell out of the way, because now you're all the way up here when you took a position right here trying to reject this line. That was originally a supply turn demand. And here goes a higher low situation. It looks like it V-shaped after it came in, came back, pulled higher low from this swing low, kept going up. So that's it. After you kind of realize that the market is literally, here goes a V-shape. Hits up here, comes straight down. Okay, a little bit of consolidation here, but I mean, and if this candle didn't pull back, I wouldn't consider this a higher low because it didn't really break above this and made it like a lower, but it's debatable. Here goes a V shape to the upside, V shape to the downside. This and this is kind of on par, higher low double bottom, right? And that's all it does all day at these levels. To me, liquidity grab, higher low, liquidity grab, trend, fail, right? You don't want to be involved in this because you don't know how far down they're going to go, but demand came at the daily level, supply, lower high, boom, lower high, boom, ooh, looking crazy, right? Snag you out, breakout retest, go, liquidity grab, failed, and then that's it. You just kind of have to take your wins and your losses based off of the what you're willing to lose, and then just keep it moving. So it looks like I mentioned earlier that these widgets or wedges are it's the money zone. So the market was flagging, and it triggered into a push phase now, because the trend is bullish. Yeah, so I mean, the code is telling me a lot. I know you guys probably don't get everything. You don't have to. I think what's important is just watching these major macro levels. And let's just, for shits and giggles, look at what the 5 minute presented here. All right, here goes the 5 minute. That's the daily, sorry. So here goes the 2 minute, 5 minute combination. We moved into the 2 minutes blue zone, which is that super trend I was telling you about. You catch a bounce out of here. It was inside that zone, caught a bounce out of there. It's probably trying to go up into the supply level that we marked out this morning. But yeah, so we'll see what happens, guys. I am going to wrap this video up. I think that's enough for the explanations, but you know, you can definitely catch these moves based off of these wedges. It's a good pullback zone to grab. Lean on this being the base or the bottom. Lean on this being the base, stop out. Lean on this being the base, stop out. Lean on this, get paid all of these little stops. Get paid, get paid, get paid. And that's how you kind of play the wedges. Yeah, I think we can look into that, right? Like, I'm gonna short this area here and get paid, you know, I'm gonna long this, but you gotta be patient for this thing to happen, right? And then you gotta believe in it. Like when it was down there, I'm sure people might have thought like shorts were coming in, and maybe it would have. But red down, red down, red wedges down, red wedges down. It's just building these structures, and this isn't special, man. This is just a money zone moving average. The 20, I think the 8 and the 14. So yeah, guys, we're gonna watch these levels today, see how the market reacts at those levels. If it wants to break out, we might continue with the trend trade to the upside. If it rejects hard with a wick, we'll take some positions to try to short the market up there. And if we can get down here first, we're gonna take the bounce back up. All right. Hope you guys have a great trading day. It's the beginning of the week. Trade smart, trade light. Let's get it.